Thanks for joining us on another episode of the Hungry Realtor podcast with me, Mike Severns, the Hungry Realtor. Please, this is the obligatory like, follow, subscribe begging. So if you're listening, make sure you follow us on all that social media stuff and go to www.hungryrealtorpodcast.com. Now that's out of the way, let's introduce our guest today, which is Brian Gross, Senior Loan Officer from Bay Equity Home Loans. Thank you for joining us, Brian. How are you doing today?
I'm wonderful, thanks. Appreciate you having me.
No problem. Brian is someone who's been in the industry for over 15 years, graduated from Bloomsburg University with a BA in economics and from Rider University with an MBA in finance, and has worked for almost every major bank, Brian, I saw on your resume.
I
We
think
got
that's right.
Wells Fargo, TD Bank, PNC, and now you're at Bay Equity. Tell us how you got started in this industry and what made it attractive to you.
Yeah, certainly. So, interestingly enough, I started my career as an assistant for one of the top producing loan officers at Wells Fargo at the time, and kind of learned the business. And remember being pretty freaked out by all the acronyms they were using in the first meeting I was in, and had no idea what anybody was talking about. So I had to kind of learn the ropes pretty quickly, and that was a good intro to the business. Ended up going, leaving there to join the retail banking world, and was a sales guy with my investment licenses and doing retail banking stuff until I became a branch manager for Wells Fargo at the time of the Wachovia merger. For those of you that remember that. So went from Wachovia to Wells and was a manager, and then that kind of started my stint in retail banking for a decade or so between all the major banks, and used my experience to kind of build up from a small branch in Trenton to managing the largest branch in for the TD Bank in South Jersey. So in the market. So that was my start of my career. Then kind of went from retail banking to Pulte Homes. So if you're familiar with the Pulte builder, they have a mortgage arm, and I worked for them as a loan officer and then a branch manager for about 5 years. Fast forward to when I left and joined Redfin Mortgage. This is during the pandemic. I'm awfully surprised to have found a great opportunity during that time, and it was really fortunate to get that opportunity. Fast forward to Redfin shut down Redfin Mortgage last year, and acquired a company called Bay Equity that was an existing killer in the marketplace, and really excited to be part of that organization now. We're owned by Redfin, part of the One Redfin family, and really excited about the opportunities that we have to grow in this current role.
Cool. I appreciate you breaking down your experience. In that experience, I want to see, like, what is your opinion of the most common misconceptions people have about getting a mortgage or the mortgage loan process?
Yeah, there's a few that come to mind. I think the first that comes up most often is that 20% down is like the holy grail for a mortgage transaction, and it's really not. Especially for folks with strong credit scores, it's often compelling to keep money in your pocket and go with a lower down payment, especially with all the expenses that come with buying a home, with furniture and moving and all kinds of stuff. Right? Oftentimes people are adding, growing their family, at the same time. So uh, oftentimes it makes sense to go with a lower down payment. The PMI or mortgage insurance that comes with a down payment under 20% is often not as nearly as significant as folks think it is. So that's kind of like one of the common misconceptions. Another is that you have to be at your current job for 2 years. It's just not true. We need to document a 2 year work history, but that can involve multiple employers. And as long as we can tell a story, there's not any giant significant gaps. We're really just trying to speak to the income being consistent and likely to continue. So there's no real requirement to have a 2 year at the same job, just to kind of document what you've been doing for 2 years. And that can include school as well. So that can be
Oh,
part of the
interesting.
work history. So folks that just come out of college, you can buy a house. You don't need to have a job for 2 years.
Well,
Um, yeah,
I have a follow up. With the interest rates so high, do you find that people are still willing to do those lower down payment loans because the loan amount is higher, obviously. So it's not just about the PMI; it's also about the interest on the money long term. Do you feel people have a good handle about how how to understand that, and are they accepting that to keep the money
yeah,
up front?
yeah. I think that there's a couple different buckets of consumers in this in this conversation, because folks that like can put 20% down. It's no big deal. It's not
Mhm.
that big of a chunk of their assets. I'm like, yeah, they should do that and keep their monthly payment where they want it to be. They have more control in that sense. And there's another bucket of folks that are like really want to buy a home and they don't have 20% down, right?
Mm.
So the interest rates aren't really a part of a factor in that conversation. Is like, hey, what's the payment? Can I afford it? Can I get into this house? And with rising real estate prices over the last couple of years and mortgage rates along with it, it makes that a little bit harder to qualify. So people in that bucket, I think, it's not necessarily like, do I use this money that I may or may not have? It's just like, can I afford the payment?
Oh, that makes a lot of sense. Um, so let's go into you talked about do they qualify, right? So what are the most important factors that lenders consider when evaluating a mortgage for a loan application?
Yeah, it's a great question. So there's a few different things, and I'll kind of go into a little bit of detail on each of them. So credit score is a big one, right?
Mhm.
Got to have a good credit score. There are loans available down to like a 580 credit score. So you can do an FHA loan down to 580. Conventionally, it's 620. But more importantly, well, equally as important, I should say, as the actual score, in recent years, or even less than a year, maybe Fannie Mae has changed their algorithm in the automated underwriting system, which is what we use to determine if a loan is qualified, can be qualified or not. It actually looks at the details of the credit report now. It's not just the score as it used to be. So it digs in a little bit deeper and says, okay, what's the specific detail in the report? Why is the score low, right? It's maybe more important than
Interesting.
like why the score being low. So, what's on the credit report is important. The credit score itself, and then the next thing is your income and liabilities, and those contribute to calculating the debt to income ratio. So it's important to note that we can use gross income rather than net, so it's before taxes,
Mm.
and we set that any liabilities folks have, credit card payments, car loans, whatever, student loans, uh, add it to the proposed payment on their new house, and then divide it by their gross income to calculate their debt to income ratio. And there's maximums for different loan programs. Call it 50% or 55% on a VA loan, like for veterans, you can go even higher than that for debt to income. But that's kind of like the limits and how it's calculated. That's a super important criteria for qualifying for a mortgage. Down payment is the next one. Got to make sure you have a down payment, and then that it comes from an allowable source. And then the type of employment is the last one that I have here that comes to mind. Folks that are self-employed or have variable income. That's super important because there's different guidelines that are applied to different scenarios. So if someone's working a W-2 job for a decade and then says, "Oh, I'm going to go be a consultant because I can make more money as a 1099 employee," so that's great to make more money. But from a mortgage qualification perspective, there's timelines where you have to be self-employed, and then folks on a 1099 are considered self-employed in mortgage world. The 2 year requirement. There's 1 year by exception, but there's a timeline that you have to wait. So the type of employment, folks on contract work, have to have the same kind of waiting period. And travel nurses come to mind, right? Like people that are switching kind of types of how they work, types of employment can get a little bit tricky when it comes to qualifying for a mortgage.
So people that know me actually know that about 20 years ago, I was in the food business. I owned my own deli. I owned a few, and I was completely unfinanceable because my accountant and I, we did a great job of writing off everything legally, obviously, where I made just enough money on paper to starve, is how we used to say it. And there was no way I was qualifying for a loan. And when we bought our first house, God, 17 years ago, my wife and I bought our first house. Um, it had to go just in her name because uh, even though I had income, the debt to income ratio with my debt and just her income, because we couldn't use our income because I was self employed and I didn't show anything on the taxes. So, I definitely understand how that how that can impact somebody. And with that, the loan officers I talked to at that point in time, thought I was kind of crazy even trying to ask for a mortgage because I really showed no income. I didn't really understand the business. So, has there been a spot where you had an unusual or interesting mortgage loan application, either from an employment standpoint, a celebrity standpoint, maybe, or something that the listeners would find interesting.
So there's a couple things there. I think the first is that it's interesting to me anyway how often celebrity names come up that are not actually celebrities.
Oh, that's funny.
You got like a Jason Bateman or a Michelle Williams or people like that, right? all the time. And it's comical how often it comes up. So not actual celebrities. I can't think of anybody that's actually famous that I've worked with, but the point you made about your scenario kind of brings to mind that there are unique loan types now these days that folks can qualify on. So like someone in a scenario like yours, might have 2 years of history of employment, as being self-employed, but maybe doesn't show enough income on paper to qualify, right? And those types of folks can qualify on like what's considered a bank statement loan. So we can look at revenues that come into people's accounts instead of their actual returns,
Mm.
and then use an expense ratio instead of their actual expenses. So there's different types of loans that are called non-QM, non-qualified mortgage loans, and those allow for like more expanded guidelines and different ways to qualify. They have higher interest rates, usually require a larger
Okay.
down payment, but they're available, so folks can qualify. We're closing
Interesting.
one this week. We're closing one for a HVAC guy who just doesn't show anywhere near enough income to qualify, but he makes the money, right? So he
Right.
can make the payment.
But
So we're
everything's
gonna
owned by his business, right? His car's owned by his business. He probably writes off a portion of his mortgage because he probably has a home office.
That's
All
right.
those different things. And then I used to. I had my son and my wife, immediate family. You don't have to if you pay them under $13,000 a year. You don't have to pay taxes on them. So I used to use them as a write-off. My son, he was 1 years old, so he was the model.
There
We
you
put
go.
him in as he's the spokesperson for the deli when we did advertising, and then my
Right.
wife, she would come in and she would help in, a couple times a month, to earn her $12,000 a year.
There you go.
So yeah, there's definitely ways. I'm glad that you mentioned that. The different programs for people like me in that situation because I know from experience it can be really tough. Um, let's pivot and speaking of things that may be tough, it may for someone who isn't at one of those qualifying levels. You said 580 or 620, or maybe they're at a 580 but they're having trouble getting their offer accepted because sellers don't really want to go through the extra appraisal inspection for FHA. They want to try and get that conventional. What are some tips on how somebody can improve their credit score in order to qualify for a different mortgage program or a better mortgage rate?
It's a great question. We see that all the time in this market, especially where it's the seller's market and the buyer has to really come with a strong offer. And some people have misconceptions about FHA loans, where like that it's a less qualified borrower, which there's some potentially some truth to that. But we there's plenty of FHA loans that close smoothly. But to your point, the inspection issue can be tricky, where FHA looks for like railings on every
Mhm.
staircase and no chipping paint and all kinds of stuff. So yeah, to your point, for folks that need to improve their credit score to get into a better program or to get a better interest rate, there are some things that they can do. So the first is not having any lates on your credit report, right? Lates are just killer, and there's nothing you can do about them, right? If we look at somebody who has late payments on their credit report, we're trying to figure out what you can do to improve your score. There's not a whole lot you can do on the tail end of that except for wait, because the impact on your score lessens as time goes by when you have late payments. So but prevention is key to that kind of thing. So not having lates on your mortgage, especially on mortgages. If you have a late on a mortgage payment on your credit report, it's going to crush your score and it's
Wow.
going to really hurt you for a long time. So that's important. Credit card utilization is probably the next biggest one. So if you take your cumulative available credit on the credit cards that you hold, and then figure what like a third of that is kind of the measure that's looked at. If you keep your balances, all you could have it on one card, on multiple cards. It aggregates it, and a third of your available credit, as balances. Anything less than that is considered favorable. You
Okay.
go over that and you got half of you're using up half your credit limit, or you've charged up all your credit cards. That's going to hurt your score in a big way because the algorithm is trying to figure out how much of a risk you are and how likely are you to pay your bills if you get extended credit. And someone that's utilizing credit in that way is seen as a higher risk in that sense.
So if I have a $1,000 credit card, and I pay it every month no matter what, but if I have over $500 on the card as a balance, but even though I'm paying that minimum payment every month, it's still considered a negative thing because I have over that 33%.
Yeah, if you're just making the minimum payment, you're leaving that balance on there that's over 33%. That was considered as a negative attribute of your credit report.
Well, that's good to know because I don't think that's something that's common knowledge.
Yeah, I mean, and it's important because it's a significant impact to your score. The other thing is having different types of debt. So, folks that have just credit cards, and try to get a mortgage, that could be tough because your score might not be supportive. Folks that, going to get so there's revolving debt, credit cards,
Hmm.
installment debt, car loans, personal loans, mortgage, that type of thing, right? So if you just have revolving debt, it doesn't really give any indication to the credit bureaus, to the algorithm, that you can pay an installment loan, which might have a more recurring, consistent payment like a mortgage, right?
Right.
So, if you don't have any installment debt, I've often recommended to folks, hey, go take a personal loan for $2,000 at the bank.
Hmm.
You know, go if you're going to buy a car, finance it. Even if maybe you don't need to. There's different buckets of folks. There's folks that are building credit that maybe don't have significant income that need work on their credit. There's folks that have too much money, maybe, right? And then aren't using debt in the right way, and then they want to borrow on a mortgage. They don't have a history of it because they don't really need it. But so finance a car, get a personal loan for a small amount, do a secured credit card if you have no credit. Building up different types of credit is super important to maintaining a strong credit score. And then the last thing I have in that for that point is inquiries in your credit report, right?
Hmm.
So, and this comes up like almost every day in conversation with clients. Folks are gun shy to get their credit pulled because the media talks about inquiries and how it affects your score, or whatever. And I think that it's important to know that that does affect your credit score if you have your credit pulled often across a period of time. But that shouldn't scare people away from having their credit pulled for pre-approval, because it's important to get pre-approved for a mortgage so you can understand if you can qualify or not. But if you have your credit pulled by me and then somebody else in a 14-day window, it's all considered one credit pull. It doesn't hurt you. But if you continue on and then you go try to get a car and you don't get approved, and you try to get another one and then you get a credit card, whatever, and you keep getting your credit pulled, that's when the algorithm says, hey, there's a problem here. This seems like this guy is having trouble getting credit, because nobody, I don't think many people know that the credit report doesn't know if you got approved or denied when you apply for credit.
Oh, interesting.
Yeah, it doesn't show up in any way on your credit report. So the only way that the algorithm has any way to tell if you are getting denied for credit is if you keep applying for credit, and it says,
Okay.
"Oh, I wonder if he keeps getting denied, and that's why he's in trouble and he needs money, right?" So
Interesting.
that's why the inquiry credit hit thing exists, because it's trying to measure if you're in need of money and are having trouble getting it.
Okay. Yeah, those are actually really good points. I didn't know, even me being in being a realtor for, almost 10 years now, I didn't know that the credit reporting agencies had no idea whether or not you got approved for the line that you applied for. I
Yeah,
did know about the opportunity to shop around, right? That they're not going to penalize you. Like if you're trying to buy a car, you can go to three different dealerships as long as you do it in that 14-day window, and they can all run your credit for the different things. And same thing with loan officers. And I tell buyers that all the time, especially when they're shopping for rates. You want to do it quickly, and all those polls count as one if it's the same industry. So that's
yeah,
great information. I appreciate that.
absolutely.
All right. So tell me, let's see, what's the craziest thing you've ever had to overcome when trying to get someone a mortgage? Like, I had somebody once, they bought a boat right before right before closing. So or uh, I'll let you take it, so you can
There's a
expand.
recurring theme here because one of the examples I had written down had to do with the boat.
Oh, that's hilarious.
So, uh, this guy, the one guy I'm thinking of, had trouble because he and his wife had together purchased a boat and had a $450,000 loan on it.
Oh,
So it's not a little boat, a big boat.
yeah, that's a yacht. That's not a boat.
So
Wow.
the payment on it was like several $1,000s a month or something, and it was causing a challenge with them, their ability to qualify. Yeah, so that was tricky. I think the ones that are the most tricky are folks that own lots of real estate.
Okay.
So because we have to consider payments and obligations on whatever real estate someone owns, or even if it's a timeshare, we have to consider that.
Mm.
And oftentimes people don't think of timeshares, which is a good example. Like, hey, like we find out about it later, we see their bank statements and we see a recurring payment going out to like wherever, and we're like, what's that? And they're like, it's a timeshare I own. And we're like, okay, well, we have to count that in your debt to income ratio, and now it
Mm.
could cause an issue with your ability to qualify. So, folks not including debt or all their obligations, but owning lots of real estate all over the place becomes tricky because we have to document the taxes and insurance
Mm.
and the HOA dues on these properties. It becomes more complicated, incredibly more complicated for folks that own real estate overseas,
Oh.
because it's like you get a tax bill for your house in Arizona, like okay, we can do that, but like if you get a tax bill for your house somewhere in like the middle of like France, like maybe that's a little bit harder.
Wow.
So and like the taxes are different, so we have to get underwriters to get their arms wrapped around like maybe there aren't any property taxes on this home that's in the woods and wherever, you know.
I
Yeah,
actually just saw somebody, they bought some land in Alaska for like 15 grand. It was 10 acres, and all it had on it was this little like survival bunker. And it was
yeah,
like torn down and had nothing out there. And there's no property taxes because it's not close to any municipality. So nobody can claim it to even put taxes on it. That's why they
right,
bought it. Because
right.
it's just 15,000, and now they can go and hunt and fish and do their thing in Alaska whenever they want.
Yeah, I mean that's a great example because like that kind of thing like might be hard to document. Like, how do you get
Right.
somebody to tell you like that the proper who's going to tell us that the property tax don't exist? The reason they don't exist is because there's nobody to tax them. Like,
Yeah,
so yeah,
it's so hard to prove the non-existence of something.
don't we
You
know?
know, and I've had to do that. There's HOAs will you know be required to do, and they're like, What do you mean? Like, there's no, it doesn't exist." Like, and when a lender or a title company will ask for something from an HOA or a condo association, and usually they're run by somebody who lives in the property, so like in the unit, so it's not even like they don't want to do it. Like, there's no sense of urgency. Like, they're just bothered by it, and
Yeah.
so it's a tricky situation when you have to prove the non-existence of something.
So you brought up condos, so I might as well mention condos are more tricky transactions
Oh, right.
when it comes to real estate, and what something that people don't realize is that condos have higher interest rates
Oh,
for
interesting.
because there's extra layers of risk when you got somebody else kind of making the rules for the property, right?
Hmm.
Now that goes away if you put 25% down or more. That risk manages itself away. But what I was going to mention that came to mind when you said condo is that there's additional questions that are asked now since the collapse of that tragedy was it in Florida.
Oh,
Um,
yeah.
so now there's safety and soundness questions that are asked of the HOA as part of the questionnaire to
Interesting.
determine if there's any kind of underlying issue that we need to be concerned about before we you know before we put ourselves out there and lend money
Hmm.
on a home, but also that we're putting our client in a safe condition situation where they're going to be okay in their property they're buying. We have responsibility in that sense. So, but yeah, to your point, like we have one right now. Like, this is a deal in process where like the HOA is like their comments to the safety and soundness questions were, well, we weren't here when it was built, so we have no idea.
Right.
I'm like, well, that's not really good
Yeah,
enough. Like,
exactly.
so yeah, sometimes it's a little bit of back and forth to get the HOAs, the community associations, to answer these questions in a reasonable way. But there is an extra layer of risk when you're buying a condo.
Well, I'm glad that you're taking care of people like that. What are some other ways that, as a loan officer for Bay Equity, that you take care of the customer? What are the benefits of working with you or Bay Equity specifically when compared to other mortgage companies out there?
So there's a couple things. So I kind of put this in two different buckets, right? Like financial and then like non-financial. So the financial piece is just kind of top of mind to most folks because it's you're buying a home, it's the most expensive thing you're ever going to buy probably, unless you're buying a yacht, right? Um, but so from a financial standpoint, since we're part of the Redfin group, we offer favorable interest rates to folks that are working with a Redfin agent to buy a
Oh,
home.
great.
So we believe in the Redfin model. We think that folks should work with a Redfin agent, and we offer a better interest rate for people to do. So it depends on the loan program. It's hard to
Hmm.
pin down exactly that number, but usually it's a quarter of a percent or more in a reduction of their interest rate for working with a Redfin agent. So that's great. Our lender fees are kind of like right in where the market is, so we're not charging any kind of crazy fees. Um, but from a non-financial standpoint, I think that's more important to me is that you find a loan officer in a company that you trust, somebody you can get on the phone, it's responsive, right? And that we try to be all of these things. But kind of like the way I describe this to folks is that working for an affiliated mortgage company, right? We are part of the same company as the agent in the transaction. There's an extra layer of accountability there, right? That doesn't exist with a loan officer off the street from whatever bank.
Hmm.
That like that person wants to get the deal done too and wants to get the person to closing, but it's very different when like I go to the meetings with the agents and I'm part of your team and if I don't do a good job or call somebody when I'm supposed to or get somebody to closing when the closing date's supposed to occur, then like that word spreads like wildfire, right? So it's extremely important that we do an incredible job for our folks and provide for a great experience and get people to closing on time because not only am I accountable to the buyer, like any loan officer would be, but I'm accountable to the agent in a very different way than the traditional loan officer would be. So, when you work with a company like ours and go with like the one Redfin strategy, model, the consumer wins.
Well, I actually can speak from experience on that because um, in 2021, I bought my house in Delaware. My wife and I bought our second home. You were our loan officer, and you were very responsive. And and that is why I don't mind sending my buyers to get a quote for your services and introduce you every time. And I think I would do that even if you weren't part of the Redfin Bay Equity One Redfin One family, because everything went smoothly. You had a system in place. There was never more than a couple minutes, or at the most an hour or so, where if I needed something, you were either texting, emailing, or sending a carrier pigeon to get back to me. So I really appreciate that, and I know that my customers are in good hands when I send them over to you. So
That's really great to hear. That's what we aim for. So
when
good.
we're getting ready to wrap up, so I have a couple fun questions for you, right? So I'm the Hungry Realtor. This is the Hungry Realtor podcast. Hungry has double meaning here. Like I'm hungry for business. I'm hungry for the real estate industry, but I'm also just hungry. For food. I have another food podcast that I do with my friend Mark, where we go and review places. We drop episodes every 2 weeks or so for that. And so what kind of places do you like to eat at? Tell me where your favorite restaurant is. What's your go-to comfort food? Let's talk about some food for a little bit.
Well, I think first of all, this is an impossible question to answer because I also share your love for food. You know, I like all different types of food. Uniquely enough, my wife and I we don't eat carbs very much anymore, so
Oh,
we're kind
interesting.
of so it's been our it's harder to go out and eat than it used to be, but we still have found very amazing food in our within our diet. So we love all different types of Asian cuisine, right? So like if you're like uh, anything from we'll go to Korean barbecue places or I can't do Chinese food very much anymore because there's not a great way to do that without carbs. But sushi all the time, right? All kinds of great sushi places. We were at a ridiculous place in Colorado recently that is the guy that runs Nobu in New York has a
Mhm.
restaurant out there. That's kind of ridiculous and all different types of food like that. Comfort food you mentioned, it's kind of like a different different path. Our family is Jewish and so is my wife, so we think of like lox and cream cheese and corned beef and pastrami and all the kind of good deli stuff that you're very familiar with
Mhm.
from your past world. So I can get down with all those different types of things. And I forgot to mention Indian food, which I also love. So I think it's hard. You're probably hard pressed to find something that I don't like. I can't think of
Nice.
any food that I don't. People are like, lots of people are like I don't eat that, or I can't think of any foods that I really don't like to eat. So yeah.
My grandmother grew up Jewish, and she had converted to Catholicism when she met my grandfather because he was Catholic, and they got married, and that was the deal back then. But she still kept to her roots, where we would have smoked whitefish salad. This stuff called halava. It was like a candy that was like, and then she would give us gelt every Hanukkah, even though we all celebrated Christmas, and she celebrated Christmas too. She never made it weird or anything like that, but it was nice to have that, and going into the deli business, like I was already familiar with a lot of the stuff that I would have to carry for those customers.
Sure.
So it's very interesting. I didn't know that about you. I guess you really don't talk about religion too much at work.
Yeah, but it drives culinary kind of like what feels like home food to you, like
Hmm.
for us anyway. So we were talking about this. We were just down in Mexico for the Bay Equity Presidents Club trip, and eating delicious food, on the beach and whatever, and talking about food. And I was recounting kind of like what like home cooked food is to us, and we were all kind of sharing what that meant to everybody. And it makes you feel good. It's like something that's like it's I don't know how else to describe it except for it's just like kind of it does something in your brain. It turns it on, right? So
I agree completely because and it's not even just about eating the food. One of the things I loved about having the deli and the catering business was preparing the food and just seeing people's reactions when they ate it or after they came back and they told me how great their party was. I'd make them hoagie trays or panzaniti, wings, stuff like that, and they'd take it and they'd have this great time with their families, but everybody congregated around my food. It gave me such a sense of pride. Um, you know, and the only thing that really has replaced that in my life is on closing day when somebody is buying a house, right? And they like I love the feeling of just making people happy with and they when someone is happy on closing day that they're getting this brand new house, there's no feeling like it that I was able to help in that process for them.
I totally agree. I need to mention also because I didn't that our newfound thing for food is sous vide. So we've been sous videing like everything every day, and it's just like the most delicious thing ever. So,
See, now I haven't done that yet.
oh, you got it. You got
I-
it. Yeah,
I've seen it, I've heard of it. It's kind of weird to me. Like everything's boiled, like not even boiled, just like really slow cooked in warm water. Um, and
immersion cooking. Yeah,
yeah, and I, and I've never done it, but there's a guy I follow on TikTok. He'll like put it in a Ziploc, not a Ziploc bag, but like a vacuum sealed bag,
yeah.
and he'll throw something in his dishwasher on high,
Mm.
and then he'll bring it and then he'll reverse sear it. He'll throw it into the cast iron just to get the sear on it, like a steak
Yeah,
or
you
something.
gotta. Yeah,
And it's crazy. Like I don't know. Like it's like the guys in the '70s that used to go to the tailgates and like put stuff on their engine block to cook it.
yeah. Well, I mean, I don't know anything about sous vide in the dishwasher, but if you get like like one of these actual things that you can like you set it. Mine is a phone thing. It's fancy, whatever,
Oh,
and you can like
cool.
you can set different presets for what you're cooking and whatever, and it just holds the temperature constant and cooks the food. So like you can make a chicken breast taste good, and that's really difficult
Nice.
because like we're like chicken thigh people, right? Like chicken
Mm.
breast is like but you can build flavor into things in a very different way than you can with any other type of cooking, and you can't really overcook stuff either, which is cool. So
No, that is great. Yeah, I guess you could put like a marinade in there in the bag too.
yeah, you
It's
put like whether you do dry seasonings or a marinade or whatever, and it puts the flavor into the food in a very different way than any other type of cooking.
cool. All
Yeah.
right, let's one last question just came to me. If you could buy any celebrity house, I used to watch MTV Cribs a lot when I was a kid. So if you could buy any celebrity's house, who would it be?
Well, I think that's a tough question, right? Because real estate, we love real estate.
Money's
You
no
know,
object.
Yeah, well, I think so. It better not be for the house I'm going to tell you. So, I think Bill Gates' house is pretty cool. Xanadu, right? So, I think it's 100 and something $1 million property. So, we can't talk about being able to actually afford something like that. But,
Right, right.
I think like the tech that would be in a house like that is super cool, right? So, just like smart home sort of stuff and like, beautiful property. And I think like the other answer would be like, anything on the water, right? Like people that like have like these like giant yacht places that you're talking about, like that you can like kind of go wherever you want. I think the combination of smart home and mobility is super interesting to me.
I dig it. I actually heard that he has floor to ceiling monitors um, in his house instead of art, and then they change like periodically,
Yeah,
and they look like walls with paintings on them. And there's also a sensor in every room that where you walk in and the climate control adjusts to your body heat.
well, I didn't know that, but it
Yeah,
sounds about right. Right? Like
it's insane.
these guys are
But
on
yeah,
the forefront of technology, and I'm sure they're building it into their homes.
yeah, yeah. If you employ the top engineers in the world, you know what I mean. Microsoft, you might as well take advantage of it at home. Well, Brian, thank you for spending this time with me today. I know you're a very busy man, helping our customers out there secure their financing for the homes. Um, this was great. I hope you enjoyed it, and hopefully we can have you on again in the future.
Oh, it's my absolute pleasure. Thanks so much for having me. I really look forward to it. I hope you invite me back.
Thank you. All right. That's another episode of the Hungry Realtor podcast and the books. Again, the obligatory please like, subscribe, share with your friends, send it out to the masses, get on the YouTubes and the Instagrams and the Facebooks and all that stuff so you are up to date on our next episode. Talk to you soon. Please like and subscribe for more info.